The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and it is my pleasure to be here following 2 great hours. It's always exciting to be able to follow. Steve Rhodes kicks us off at 9 o'clock, of course. Great show. Steve's got a number of webinars he's talking about and how he uses certain technical indicators. I really would like you to check it out. He also talks about the RSI, the relative strength indicator. A really nice tool. I always use it in my work. I like it. It's secondary to another indicator that I found over the years has just a little bit, for my purpose, just in terms of the technical aspect, has a little bit more of a coincident indicator with my notation of the letters. And then what a great 2 hour with Tom, Daryl, and Steve together just before this. Now, of course, talking about great hours, health and your mental outlook comes. This is a great show. You've got Nico Dohan and Paige come on at noon. Then, of course, we've got Daryl comes back, and Daryl talks about his diagnostic trading hour and his different technical tools that he uses. And I see now that he's also using the RSI very successfully. Great. I love it when these particular technical tools that have been developed, you can either modify them or not modify them, use them in the classical way. But it's, I always say you've got to have this. It's like the snowstorm that's coming up here. So what have we've got? We've got, they said it would start around about mid-morning, want to start a little early. That to me is always a heads up. So you've got all your tools. Do you want a shovel with a metal blade? Absolutely not. This is where you want plastic. You got to have the right tool for the right occasion. What kind of a snowblower? Is it electric style? All this stuff goes into whatever technique you're using for whatever it is. So I love to have this huge Sears and Roebuck toolbox. Let me just show you some things right now. So Daryl comes on. Then you've got Dave White. You've got Ken Shreve. Congratulations to Ken. I heard him talking yesterday. Stock that I had for my subscribers. We got stopped out for a 10-cent loss, and there was a reason for it to have that stop in. And then LinkedIn is up 18.3%. I feel very strongly that I'm prepared sometimes to give up a potential for a sharp slide at 8 to 10% or 12% risk to the downside, because I know that with the techniques we have, we can always find that somewhere. That is the upside. The downside makes it very hard. You have 1 or 2, 8 to 10% losses, and it kind of adds up. So my reasoning was that we had LinkedIn at 122.20. Excuse me. It had done very nicely, but then it started to pull back. It had to go above 127 something. So let me just show you the chart right now, because I'm going to do a bunch of things here. LNKD. I like to talk about the good. I have absolutely no qualms about talking about the bad in my opening call. And this is my fault, not the technique. I spent a lot of time. I even put in the arrow the day before to show that we had made a peak C at 127.45, and my technique, for those of you who are listening, a peak C invariably will go to a leg D. Well, yesterday was not a great day intraday, because LinkedIn started to rally and then it started to pull back, and my fear was there we would be stuck at 1 minute to 4 with LinkedIn at 122 in the 122s, and we hadn't been stopped out. And then all of a sudden the news is perceived as negative, and then it gaps down in the morning from the low, not from 127, but from 122, and that's serious stuff. So I put the stop in. It just touched it, and then earnings came out. It was up 10%, 12%, 30%. Now it's up 18%. But you know what? It's the technique. If you have veracity in your technique, if you have good results, if you're consistent, if the technique itself says, I have a very, very diligent and efficient way of looking at the market, then you want to stay with that technique. Then you have to use the other tools to complement the technique, or to say, hey, you think such and such, but if something else happens, be careful. Now let's talk about the successful boy. Well, all it did, it cost, we made a full 10 cents, but of course we could be up very nicely. But what would have been nice now, even though it's leg D, is that you've got time to think about what you want to do next. It's not going to drop to 132 at 146.60 in the next hour or two. You got a whole weekend. You can think about what you want to do, whether you want to add, but nice core position. So we lost that opportunity. There'll be another. But now look at this. For my subscribers, we've been talking about a technique that I've featured here, spoken about a lot, and that is this technique of the oval formation. I call it the leg up. This is not a single leg going A, B, C. This is just a huge move to the upside, where no more than one or two times do you get a pullback, and they pull back. Look, how many black candles do you see here? They're all big white candles. Look, you had 1, 2, 3, 4, 5, and you get to peak C in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, about 23 sessions, and you've had only 5 tiny little black candles. That's power. That's buying intensity. Then you make peak C and you start that choppy move. And then you go around, and I identify the 1386 as the low, and 14,019.75 as a high. And what I'd say is there should be a spike above 14,019 to start leg E. But for the full power of this particular pattern to be unleashed, it needs to spike well into the 14,000, and I'd even say 14,050s, let alone 14,030s, to create the neck. I even typed in here, neck, head, and beak. Now, what is that pattern? I don't know if I'm going to be able to find it right now. Will I be able to find it? I'm not going to waste time. Let's just see if this one can take me back enough, and we'll see if I've got it here. No, okay, obviously not. So I don't know where it is, but it's a pattern that looks like a stalk leg. I'm just going to grab this one. If I've got it on here, then that's great. If I haven't, I haven't. All right, I don't have it. But the pattern is that you go up sharply, that's the leg, then you make the body. I like a lot of bars. You know what's interesting about this? We could even extend this oval a little longer, although the rule is really not to take out that 14.19.75, and we took it out today by 3 points, 14,022.62. But it's accomplished so far just about everything it's supposed to, except it need a little more height. But wait a minute. The Dow Industrial, the diamonds, the trading vehicle that we use, I just realized I didn't send this out to my subscribers this morning. I wrote it up and everything, and then forgot. I had that up arrow. Look, we closed right there. And yet we had I had the up arrow. I don't know why I forgot to send it out. I wrote it up and everything. But look at the pattern. There was an oval formation. I said there should be a rogue wave to the spike to the upside. It went to 139.89, peak D. That was an alternate wave count. Then I put the arrow in for the drop. We dropped down sharply. Didn't quite get to the 138.32 area. We went to 138.36 and then spiked up. Pull back again, and then I drew in that arrow because the technicals were saying, hey, there's still internal strength. So even that's been accomplished. Now, what is this? This should be either leg E. No, it can't be. Yes, either. No, it can't be. 38, 32, 38, 30, double bottom. Yep, it can be. So this is either E/C. So my theory is that we are getting closer and closer to some kind of a pullback. I would love to see on Monday one pop to the upside, and then let me go to the Dow chart here, and then I'll run the numbers, and I'll take calls at 877-927-6648. Whoa, we've got a bunch of people waiting in line there. So we're at 139. Let me run the numbers right now. We're up 43 at 13,987 in the Dow. The S&P is up 8 at 1517. The comp index is up 27 at 3192. The gold is down 280. Silver is up 10 cents. You've got high-grade copper up 350 at 376. Hey, that's nice to hear. And bonds are down 10 30 seconds. And the dollar is down 0.04. We're going to our first caller. We've got Steve in Clearwater, Florida. Hi, Steve.
Hey, Basil. How are you, sir?
I'm very well, thank you. How are you?
I'm good, good. I have a kind of a generic question for you. I think you maybe just in your recent summary there maybe answered it, but back around when the physical cliff discussion was going around, I took about a third of my positions off in cash on the sideline, and the market gapped up, around January 2nd. And
December 31st, January 2nd, right.
Yeah, it kept going, and I know, a lot of folks on TFNN say we always come back to, to close the gap. So I'm wondering, but the market keeps going up. So I've got some cash on the sidelines, and should I kind of wait for that to come back to that gap up, or do you think there's an entry point somewhere else here that I should wait, maybe on the SPY or something?
Okay, I'm going to make a suggestion, and this is a suggestion. I don't want you just to dive in. I talk about it, and then you just dive in and do it. I'm going to make the suggestion. Think it through in terms of your entire portfolio. I don't know if you own a home. I don't know if you rent. I don't know what you do. I don't know what you have in the background. I don't know if you have 401k. I don't know what you have. You know what you have. So I'm going to say to you, if I'm correct about this being leg B and 22 extending, if all of next week, we won't know until Friday of next week, but we actually will know Monday, because if on Monday there's a pop-up in the Dow above 14,022.62 by 1 cent, that extends leg B. And it gives me even more comfort at saying that that's probably a leg B and not an alternate count. And then what I would say to you, and I had the same question yesterday, as someone had called to say, what do I do? I think it was yesterday or the day before, about looking out. He was long. He had held these long positions. And in fact, I think that's when he got in on the pullback. And he, excuse me, he was holding the long positions. And I said to him, if I'm correct, even though I'm anticipating when we do get a pretty sharp 500 to 700 point pullback in the Dow, we should still go to a leg C and then a leg D. And even the monthly chart is in leg C. I'm pretty sure of that. And that portends higher prices. So in the overall thinking, my suggestion is I'm giving you this advice right now when we've made a 5-year recovery high. But that's not the point. The point is that I would like you to start a position. I don't know if you want to choose the SPY or the diamonds. I would not go to doubles or anything like that. I'd just be straight in, and I'd tiptoe in, and I'd start a position. When I start a position, let's just say you pulled your money out. Now you've got this chunk of money there. Don't treat it like a chunk of money. Treat it as a partitioned set of sectors or little boxes in your little library there, and you say there's one particular. So if you don't mind holding on through the break, I'll follow up with a question in terms of answering it as best I can, and then I will give you parameters at which I think would be an opportune place to add. So you don't mind holding?
No, I don't mind holding. Thank you.
Okay, we've got Steve in Clearwater, down in Miami, and I'll be right back. Basil Chapman, Dow's up 43, giving back some of the gains, but still a nice day, up 6.9 in the S&P.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. We're back. Basil Chapman. Dow is up 42. S&P's up 6.84. And we're on right now with Stephen Clearwater. He's asking about the S&P. He's asking about, the question really is one that I have to tell you, Steve, you're not the only one. There are a lot, just a lot of people who are getting out. Some smaller positions, but there are people that really got out a chunk during that crisis period, and just because of the speed of the move up, we're just left high and dry. Now, what I'm showing here, because you asked about the S&P. The S&P has a beautiful trend line. What is a trend line? A trend line, at least as far as I'm concerned, a trend line is where points of contact, usually it's 2 to 3 points of contact, but it's actually both a visual as well as, how can I put it? It's a visual representation of price points that have historically been very strong resistance. And that's where you get what I call the inside track. In my CD introducing the ChapmanWave methodology, I spent a lot of time talking about this as the inside track repellent or resistance line. It could even be called the sell zone. And if it powers above, which is done now, just as the Dow is squeaked above it, that's usually a very good sign. But it also says, okay, now you're getting to what's called an overbought situation, and you should have some pullback to retest the levels that you were that was such strong resistance before. Even though, because it's a rising trend line, the levels will be high. The previous one was 1474.51, so now we're up in the 18.31 area. But here's the issue. The 9-period moving average is at 1476 on the S&P cash. So this is what I was going to recommend to you. And I can tell you from experience, I had to do some investing just for my grandchildren. We had a little money, and my wife and I wanted to put some money in. I believe it was somewhere around November, December of 2009, and I decided in January, I said, we're making some kind of a market top here, but this is a very long-term position, so I put some money in. So if it was, let's say, Dow 12,000, at this point, the Dow's at 13,986. So it dropped. It dropped quite sharply after that, but it's a longer-term position. I had no qualms about it because my very longer-term position was that we would be making higher highs. So I'm going to recommend to you start some kind of a position for two reasons. One is, if we keep going up, at least you're in it. But the other is it gives you a real good feeling, even though it might go to 15, I think 22, somewhere around there is going to be strong resistance, maybe 15, 26. I don't see that much at this particular point on the upside. But then coming down, you've got 1476. So now you're in it at 15, 16, and you're looking, you say, down 1476, and that's down 25 or 35 points. But that's not the issue. The issue is, and you have to realize that the stochastics at 99%, that's really strong, and the MACD is good, so it could pull back, but it's going to take a while for it to get to 92 or 88% unless we smash to the downside. So I'm going to recommend you start a position, and the next time you look at adding would be at 1476 on the Dow, between 1478 and 1475. So that's my recommendation. And as I say, think about it. You don't have to just, hey, Basil said you get in. I'm not a guru or anything. I just do technical analysis. This is the best that I can come up with at this particular point. I think that the patterns that repeat over and over and over again, and therefore I'd like you to be in it. So the question is, what if you get in, and the next thing we know, the S&P is at 1545? Well, the other suggestion I will make is the next pullback in the Dow, in the S&P and the Dow, if the 1506 level holds on the S&P and then it starts to form a little bit of a base, I might even recommend you have a trading position that you put on, and then what you will alternate is that if it goes above your entry price of today or tomorrow, whenever you decide to nibble at it, the higher position becomes your trading position, and your core position becomes the lower one. Do you understand what I'm saying?
I think so, yes.
So let me do this again. You nibble somewhere around here, 15.15 today, or if it's 15.13 on Monday, or 15.22, doesn't matter. You're just nibbling. It's a starter position. The object is that you would like to add it on some kind of a sharp pullback to the 14.76. This is adding another position, but a more sizable one. But as a trading position, if it comes back to the 1507 to 1505 level, holds it, and then it starts to rally to 1508 to 1509, you might want to add another position, but also very small.
Right.
And that then becomes your core position, because that one you don't want to have it. 1502 should be your stop. But if it breaks above the price of the one that you just nibbled at, the lower one becomes your core, and the higher one that you bought becomes your trading position. And that one, the 1516 one, has a stop of 3 points or 4 points, and you just have it as a trading stop. So think about that. If you're not sure, then call me back Monday and we'll go through it again, okay?
Yes, sir. Thanks, Basil.
Thank you. We'll be back with Dan in Miami straight after this break. And
if you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go along the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour. Dow's up 34. S&P's only up 6. Interesting. We made that little break above the oval. So far, it's not that big, but it did break above it. We'll see what happens. We're going straight to Dan in Miami. Hi, Dan. How are you?
How are you doing?
Hi, Dan.
I'm watching the dollar. It looks like the stochastics, which I follow intensely, is they're both slow and fast. Look like they've gotten over the 90 range and seem to be settling in.
Let me just ask you a question here. When you say the stochastic, what percent do you have your daily stochastic at right now?
14.3.
So yeah, 14.3. But what percentage does it give you for the slow moving average of the 2 moving averages? Can you see?
Well, it's about 80 something.
80 is the fast-moving average of, it's called the stochastic slow-moving average, actually as a name, but within it, it's got 2 moving averages, and one is called the fast-moving average, the other is the slow-moving average, and the fast one is up at the 80%, the slow one's at 67%, so it hasn't broken above 80% yet. I like the slow, I go by the slow one. That's the one to me that has to stay in the 80% to sustain a move up. However, so do you have a position, or you just watching it as an indicator?
I'm watching the dollar. I'm going to watch it. I use you watch the VIX and the dollar at the same time.
Okay, because what's interesting right now is that the dollar for about for the past 5 sessions, the dollar's acting very well. If I look at the volatility index, the VIX, that made a peak D and is down at 12.93, which still shows buying pressure in the market. So peak D in the daily. Monthly is looking terrible because it's still underneath the 9-period moving average, and the stochastic is flat at 12%. MACD is still very negative. The daily is flat. It tried to rally this week above the 9-period moving average, but didn't. So for me, the three bears that I would be looking at would be the TLT. That's bonds. It's at 116.84, up 17 cents. It's showing signs of strength in the technicals, but the price, until it breaks that ugly bar of the first, what is that? That was the 1st of February, 117.85. If it does break that level, then I suspect this market is going to be pulling. You're looking at it almost like a market indicator, am I correct?
Yeah, basically.
Okay, so if you're doing that, then what I would say to you, I need my three bears to be moving in concert. They have to be going together. If the dollar, which is acting very well right now, there's absolutely no question about it, but it's acting very well within the context of the monthly being just horrible, and the weekly being okay. But the weekly has a chance to make a W, what I call a soft double U bottom. So this is the U-shaped pattern making a higher high. That's good. Stochastic is trying to rally in the weekly chart. The monthly needs to cross the weekly needs to cross decisively higher in the MACD. So this is what I'm going to say to you. I'm getting some indications that we are really close to some kind of a pullback, and it could be quite a sharp pullback. Not the big pullback, but a pullback in the market. If you're watching the dollar, if the dollar breaks above 80.67, that was the high of the 10th of January, there's a really good chance that it's going to go above 80.87. How can that be? 80.67. It'll go above 80.87, the high of the 4th of January. If it does that, and the T-bonds, the TLT, is up in the 117.5 to 118 area, and the volatility index has finally jumped into the 15s, preferably you want to see it in the 16s, this market is coming down. That's the way I'm looking at it. So let me just go through it again. The dollar right now, if you're watching the slow stochastic rallying, you can see the dollar rally many times before. But until the slow stochastic is able to sustain a move like it did back in when it broke out back in October the 25th, and the slow stochastic started to hold nicely above 80% and went to 90%, that sustained the move to peak F at 81.46. When they both broke down, the MACD and the slow stochastic, plop, the dollar came back down to 79.26, ready to peak C at 80.87, came down and went to a lower low of 78.92, which is 1 penny below a key level that I had drawn as a particular very important low, and that was the low of the 17th. So far, dollar's acting well. It's sitting right on the 9-period, 200-period moving average. If you see the dollar on Monday, if the market starts to pull back Monday or Tuesday, you want to see the dollar quickly go to 80.50, 80.67, 80.87, and the moment the dollar starts trading in the 81 area, this market is going to be pulling back, and we've got ourselves a good 7 to 10 day or 5 to 7 day pullback in the market, at least. More importantly, if the dollar suddenly fails and it goes underneath 79, 77, this is the dollar index. You're looking at the index, right?
Correct, yeah, DXY.
Yeah, DXY. Okay, that's what I'm looking at. If the dollar starts to break under 79.60 by Monday or so, then it's just another one of those failure patterns. So those are the parameters. I'm also watching it closely, but I like to have my three bears. That's the dollar. I call it Dolly, VIXI for the VIX index, and Bondi, that's for bonds, moving together. If you get those things moving together to the upside, this market's going to pull back. And I've got a lot of stocks, key stocks, that are in leg D, E, and F in the daily chart. So I'm real close. I was just expecting one pop over the high of the other day, which we've just got. I'm not sure it's done yet, but I'm going to watch it real closely. Hope that helps you.
Yeah, that's great. Thanks.
Thank you so much, Dan. Let's go to Ilka in Boston. Hi, Ilka. How are you?
Fine, Basil. How are you?
I'm very well, thank you.
I'm so happy to talk to you. Can you go back to the, how about the snow? Is it coming bad in Newton?
It's been coming from early this morning, but it's still just tiny little flakes. I don't like the fact that it's very tiny ones because that tells me it could start to increase in size. We'll see. We'll see. Oh, well, of course, my wife went to work. Then I'll never get to tell my funny 1987 story, but that doesn't matter. So you want to look at
some other time.
Yeah.
Okay, so can you go back to your Dow Jones count on a daily? I also have a question on your S&P and diamonds, but let's just start with the daily on Dow Jones.
Okay, I'm at leg E right now. Your question is?
How about, I think already leg E actually happened by when you look on the day on the 5th, February 5th.
Yep.
That was
14,013.60.
Yeah, and the following candle?
On the 5th, on the 6th was 13,991, much lower.
So that's a peak.
Yeah.
So
no, but you've got to use peak D was 14,019.78 on the 1st of February.
19 and 13. Okay, that's fine. Oh, okay, I miscalculated.
Yeah.
So the only other thing is yesterday's candle went lower.
Then the 13,860. Yes.
That's right. So that could only be new peak A, if anything. I mean leg A.
No, we haven't taken out the low of the start of 12,883 from the 31st of December. So this is all one move up. So this is E. It could be E/A. I'm being conservative. I'm calling it E right now. See, the stochastic is at 88%, but the MACD is just tipping down a little bit. So I've got to be aware that there's a chance that it could pull back. But
no, that's what I mean. Yeah. That's what I meant. I did mean that. Okay. On your S&P, I think there is a miscalculation there because there is a low that was broken. Because I'm just trying to see, because I see this market. Yeah, I see it. Yeah.
This is G/C right now.
If you look at the after the D low, the peak D low.
Yes.
Didn't we break that low? So the continuation.
Yes, we did. Yes, we did. We went to 1495.02 and then 1495.71. So the lower the fourth allows for... this is something... You know how I've spoken to you about? There's an instant restart. Yes. That's an unusual instant restart.
I knew that you're going to break a rule. I knew that. Mm-hmm.
Yes. Well, actually, I only break the rule because you need the rule... First of all, and if it goes to the rule and then it just breaks it by a fraction, then you're allowed to use the alternate. But we had, in the 120-minute chart, we had a second stalk leg formation. There was the leg from 12,883 in the 120-minute chart from the 31st of December. It made the body, went to the neck, and pulled back briefly. But it doesn't matter. It was still a pullback from D, and then it recycled with A, B, C, D, E, F, and now it could even have recycled again because the move that we're in now, I'm going to show subscribers on Monday, and of course I've got my webinar coming up on Wednesday week. This coming Wednesday night, the 13th. I'm going to explain some of the, I won't go into too many details because there's just so much to discuss because I want to talk about the stocks the low price stocks that I'm looking at that are really coming on strongly, which I'd like to get, as well as shorts, but I'm going to briefly just explain. Maybe I'll do it in my newsletter if I don't get snow, if I don't lose electricity this weekend. I'm going to show the pattern that I call the flat base, the unusual flat base restart in the 120-minute chart, which says at some point we should be coming back to test 13,839. And when it happens is going to be the issue, but that's the technique that I'm looking at now. So I hope I've answered those questions.
Those torque legs, like especially with the two that you have, that would be like Elliott Wave 3 possibility. So I think
You see, this right now, if you're thinking Elliott Wave, now we're in a flat. And if we
We're
have
in
a
a
sudden
flat because
spike,
it's inside wave of the wave 3, which is not completing wave 5, and then we'll have a retracement and maybe higher move again. But we'll see how it goes. But your Chapman wave is so wonderful. And it's, those just tiny little things. Sometimes when I listen to you, I have a little bit different counts, and I just wanted to confirm that.
Okay, well, thank you very much. Always love to hear from you, Ilona, and say hi to the family.
I definitely will. Thank you very much. Have a safe weekend.
Thank you. You too. Let's go to Brian in Franklin, Mass. Hi, Brian. How are you?
Very good. Yourself?
I'm very well, thank you.
I just wanted to get your thoughts on TripAdvisor. They're coming with earnings next week, and
actually, formerly a Newton company started here in Newton, Massachusetts, where I live, and they're about to move. I think they're moving to Needham or something like that.
Yeah,
that's a bit of a loss.
For tax breaks.
And you know what? If they go for tax breaks, I don't blame them at all, because it's a great company, I believe. I don't know all that much about them, but I've read some of how they developed and what they're doing, and I think they've done a fantastic job. So, do you have a position, or you just question? Do you have a position?
I know. I was actually looking to buy some February puts. They're $1.50 from the February 45. It seems like it's a pretty steep premium with the stock selling at 47. But I'm just wondering what your thoughts are.
All right, good. I've just quickly done a ChapmanWave notation. Now, folks, if you want to learn about the ChapmanWave, what I am going to do a number of times over the period of the hour that I'm on for my webinar, my free webinar, this is for subscribers only, or for those people who are wanting to take a 2-week free trial subscription, we would love to have you there as well. So that's Wednesday night, February the 13th. Now, the technique of the ChapmanWave is to look for the most identifiable lowest low bar. TRIP is trading at 47.07, up 23 cents. The low that it made on the 1st of November at 8.63, it gapped up. Now, there was a question I mentioned earlier on, a little while ago, about gaps being filled. I will talk about gaps Monday and Tuesday of next week. Someone remind me. It's really important to treat a gap as just one little tool in your huge Sears and Roebuck arsenal of tools. Why? Because I can show you gaps that have never been filled and won't be filled for a long time from the low of 2009. Hey, but if those stocks make gaps just recently, then if they're turning down, it's like a moving average. Where's the first place you look for? You look for the gap. Well, there's a second gap, and this is, I'm sure, Brian, this is what you're looking at. You're looking at the gap of 40.64 that was made on the 11th of December, right?
Yeah, that's actually when I bought the stock. It was on that day.
Okay, now here's another thing. There was a gap at 42.80 on the 2nd of January. So this is what I'm looking at. Can you see how hard it's working to make higher highs? It is making higher highs. It's in leg C in the weekly chart. I'm actually looking at this stock as a buy, but that's not to say that you couldn't play it as a short. So what I'm going to recommend to you, it's in D in the 120-minute chart, but it's got what I call a flat MACD. That takes the up arrow or down arrow trend from the last signal. So at this particular point, it looks to me that if I get a confirmation that there's going to be a down arrow with a peak D, then you're looking at the downside. So I tell you what, I'm going to take a moment because I've got you online. I've got Chris in national waiting. I'm going to give a summation when I get back. I'm watching this closely, and what I will suggest to you is 43.87 is the 9-period moving average in the weekly. But give me a moment, and I'll tell you exactly the way I would look at it as a trade either way, okay?
Thank you.
Great. We'll be back with Brian and Chris straight after these messages.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Great moments are born from great opportunity, and that's what you have here. The opportunity to answer the questions, should I buy or should I sell? Should I be in or should I be out? Hi, I'm Steve Rhodes with TFNN, and I've produced a free report, Reading the Message of the Markets, where I'll teach you how to use a set of tools that will answer these questions. Go to the homepage of TFNN.com right now and download Reading the Message of the Markets. This free special report includes step-by-step video examples that would have had you out of the market before the crash of 1929, before the crash of 1987, and would have had you back in the markets buying at the bottoms. This set of tools works on all time frames and all instruments. This set of tools will shape your trading and investing future. Folks, this moment will never be here again. The only cost is not taking action. You were born to be a money master, and the time is now. Go to the homepage of TFNN.com and order Reading the Message of the Markets.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. We're on with Brian Franklin Mass. We're looking at CHIP. This is TripAdvisor Inc. When issued, TripAdvisor Inc. is trading at 47.12. Since the low of the 31st of December, folks, if you want to learn about ChapmanWave and how you can get to that peak D, it went once to peak E within 2 bars after making D, but it's made 1, 2, 3, 4 buy modes to peak D, and that's when it's pulled back. That's the 4th highest peak. And it's pulled back here again, and what happens is it has a sudden spike to the upside to make the D. Well, now it's in leg B in the 120-minute chart, but I'm getting signals just like Brian's looking at it and saying, I think it's starting to weaken here. Brian, this is what I'm going to advise for you. If you can get, if this thing goes about 47.77, there's a chance it could retest the highs. If by Tuesday afternoon, Wednesday morning, instead of doing that, it's somewhere around the 46.42 area or 46.80 area, I would say to you, okay, if you want to short it, you can short it, but it has to be a small position, more an experiment than anything else, and you want to see it quickly go underneath 45.66. But here's my advice. When it gets to 44.10 to 43.55, if it does that, I would be out of that position. I'd be looking to possibly go to the long side. And in fact, if you do decide to short, you've got two choices. You can go short, small position, maybe add to it on a break below that 46.30 level, 46 level. But my advice is that this is looking really strong. I would rather be a buyer than a shorter.
Yes, I won't buy the puts. It's going to expire Friday, and they close earnings on Wednesday after the bell. So
Wednesday. Wednesday. You know what? How about give me a call on Tuesday? Let's look at it together and see, just for fun, if we can get some kind of something going for the. Does it come before the bell or after the bell on Wednesday?
After the bell.
Okay. How about that? Tuesday or Wednesday? Give me a call. We'll look at it again.
Wonderful. Have a great weekend. Be safe.
Same to you. Thank you very much. Let's go to Chris in Nashua. Hi, Chris. How are you?
Hey, Basil, how you doing? Hey, thanks for taking my call. I know
my pleasure.
A couple minutes here, but just what's your take on Stratasys?
Stratasys, I think, has made... This is a real toughie. It's in the sexy area, but it got smacked just like DDD. SSYS, folks, is the name. Stratasys Inc. Oh boy, fancy names like that. This is inventor, patent, fused deposition, modeling, 3D printing, and prototyping. There's a mouthful. Well, the same thing with DDD, triple D. I'm going to make the suggestion. Do you have it or you don't have it and you'd like to buy it?
I bought it yesterday on the dip there below the 9 EMA, and it jumped back above it, and it seems to be holding it.
So you have about a 60-cent gain on it right now, right?
I've got about a $2.50. Yeah, I got it in 80 yesterday.
You bought it. Oh, that was fantastic. All right, if that's the case, let me just tell you this. This is a very quick peak A to peak B to peak C. I think it's going to arch over and do some retesting of the level that you got in at, but it might still go to D. So here's my recommendation. I would not take a loss on this, because if it goes underneath 79, that's that arch formation. The weekly is, the fast-moving average is acting well. I'm just looking at this and I say, wow, I wonder if this is not a peak E in the monthly that says there's a deeper correction coming, but it's on the IBD list. Money managers are going to grab this whenever it pulls back. So I think you have yourself a nice trade here. So this is my recommendation. You're in leg C. It could pull back to 81.44-ish, somewhere around there, and then go quickly. If it goes quickly to leg D, I'm going to suggest you take profits, at least on half of the position, if it can break above 84.56 or 84.76. Why? Because if it does it by Tuesday or Wednesday, then it could very quickly drop, because the quicker you get to D in the ChapmanWave, the quicker you pull back. So nice, you got a great move. If you want, we can look at it a little bit more on Monday. So far, it's acting very well. Nice entry, Chris. Congratulations. Thanks for calling.
Thanks, Basil.
Thank you. So, folks, this is it. The storm's coming. We'll see what happens. I hope all my electricity is up and everything for my subscribers. I will start sending posts this afternoon after the bell. So please go there. Stay tuned for